All right. Well, hello, everyone. Welcome to our live training today here on YouTube. So excited to have everyone with us. Of course, a really valuable topic being covered today, especially under current market conditions. So how do you know when to sort of buy the dip, if you will? Is anyone familiar with that concept, that buy the dip? Not only have you heard it, but do you know what it means? Do you take advantage of those types of strategies in the market? We're going to be covering all things related to that today. So super excited to dive into that with you. And we're going to go ahead and get started here in just a moment. But before we do that, before we get started for the next hour or so that we're together, please let me know if you can hear me loud and clear. Always like to make sure that you can hear me. That way we can start off the session and just kick things off on the right foot. Also, are you a VantagePoint user already, or is this the first time you're seeing VantagePoint? If you are a VantagePoint user, just type in VP for me. If you haven't seen the software just yet, I always like to make sure that we start off at a point where everyone can follow along, because whether you're a VantagePoint customer or you're seeing the software for the first time, we will walk through the technical analysis together so everyone can get something out of this session. So whether you're using it on VantagePoint or a different platform, this session is designed for education around just trading in the markets. Now, I'm not a licensed advisor, so I won't be telling you what to trade or how to trade, but certainly helping you to better understand the technical analysis. So hopefully you can start incorporating that into your own trade strategy. So let's go ahead and get started. I'm going to go ahead and get our software pulled up. And thank you for everybody who is chatting in. That just really helps me to make sure that we're covering relevant information today and that everyone's on the same page. So let's go ahead and jump on in. I think everybody should be seeing my screen already. So we should be good to go. Going to get started. Hey, Mark. Hey, Brad. I'm just trying to look to see if I see a few familiar names. Mo, thanks. Welcome back. All right. Very good. Debbie, thanks. Okay, perfect. So gonna go ahead and jump right on into our software today. So as you can see, you've seen up on my screen already that we have FMC Technologies. This is just a great start to, actually someone in a previous session that I was working with brought this to my attention. So I thought this would be a great chart to start with, showcases just how easy the software really is to use. And so since we do have a few kind of new people to VantagePoint in the session today, we'll start here with the basics. Don't worry, it's gonna be pretty quick because it's pretty simple. So the first key piece is understanding what are you looking for a shift in the trend. Any type of swing trader, really timing and direction is generally the two key pieces. So when it comes to timing and direction, VantagePoint has a huge advantage in the markets because anticipating that direction ahead of time using the predictive forecast is paramount. So let's just walk through a couple of trends here. One, we have what we would call a reversal to the downside or a bearish expectation. And that's when our our blue line crosses the black line below, the trend turns red. The neural index, which is a predictor of price for those of you who are not familiar, would also be confirming that shift. So we have a trend, direction, and timing indicator up here. Then we have a price indication down here in our neural index. And then we have a strength indicator, actually three of them down here with what we call the predictive differences. You'll find that these are really measures of strength within the corresponding trend. So when we see all three of these moving in the same direction, it can give you a lot of confidence. And in fact, when we see all of these pieces start to line up, giving us that same indication, that same directional shift, that's when you can have a lot of confidence making those trade decisions for yourself. And so you can see in fact, immediately that trend, right time, right conditions, just starts to pull to the downside. And we can see a nice bearish move. So whether or not you like to short the markets. If you're on the right side of it, it can be a great opportunity for profit potential or locking in profits as well. So let's take a look at how to identify a bullish trend, right? Does anyone only trade bullish here in the room? If you trade bullish, please put that in the chat. Whether it's bullish or you like when the market goes up, let me know. If you're okay doing either one, put both bullish and bearish. Or if you really like to identify pullbacks or reversions or reversals, let me know if you like the red, right? Let me know that in the chat as well, because we are going to be setting up some different ways to find these types of opportunities, whether it's a buy the dip and a short-term reversion or a potentially longer reversal. We're definitely going to jump into that today. So let me know in the chat so I know what to cover. All right. Thanks, guys. I see them coming in now. All right, some of you like to trade both bullish and bearish. Some of you like just bullish. All right, good. Well, we'll cover the gamut today then, hopefully, and get into some great details to help you guys in your next setups. So as we move through this trend or this chart, we can see looking for the exact inverse or opposite scenario happening instead of to the downside. Let's look for movement to the upside. And so in VantagePoint, green is a nice green for go, if you will. So you see the blue line crossing above the black line. That trend is indicating a bullish expectation. Now, next we'd come down and confirm. I think you guys are getting the hang of it. And we're going to confirm with our price indicator, which is the neural index. Actually looks out 2 days in the future with that calculation and the neural networks and AI that it's using to work these calculations behind the scenes to forecast that price 2 days ahead. So looking for that bullish expectation there. And then of course, nice strength backing that movement, that trend, that direction coming from our predictive differences. And we've got kind of 3 checkpoints at this time looking to confirm that bullish expectation. And lo and behold, here we go. We've got that nice bullish move to the upside, and managing that position then becomes fairly easy as long as the blue line and the black line are nicely spaced. And we've got green in between there, a nice bullish expectation from there as well. Now, fourth point of confirmation. Yes, there are 4, right? Why stop at 3 when you can get more confirmation? So that's going to be our predictive trading candle. All right. You know, my mouse just keeps getting a little bit bigger and a little bit bigger. So let's just fix that here very quickly. All right. A little bit better there. Okay. So if you see this gray trade candle, fabulous, can help you not only confirm those previous points of confirmation, but also help you with kind of identifying the best entry point. We'll get into that here in just a minute, so stay tuned. But let's take a look from a confirmation standpoint. We would want this trade candle green as well. So a higher high is what this is indicating. That green shading on the top of that candle indicates that the high for today was expected to be higher than the previous day. Also, the low expected to be higher than the low from the previous day. So it takes the predictive data and compares it to yesterday's actual information to give us that forecast of a higher high and a higher low expected. So using that predictive trade candle, we would expect price to ride somewhere in between that gray range today. All right. So those are our 4 points of confirmation. Again, let's just loop back through that. All right. So we have 4 points of confirmation. You guys are going to get the hang of this. So we're going to get 1 point of confirmation with the crossover, 2nd point of confirmation with the neural index. We're going to look down at the predictive differences, right, for that information on strength. That's number 3. And then 4 is going to be the predictive trade candle. Check 1, 2, 3, 4. As long as those line up, you can have a lot of confidence in that expectation for that upcoming trend. And yes, I said upcoming, because keep in mind, VantagePoint's looking behind the scenes. Now, before we move forward, do we have any questions on just how to read the basics in the software? That's just the basics, looking at those 4 points of confirmation, confirming the expectation, and moving on from there so you can make informed trade decisions. So let me know in the chat. I will keep a close eye on that coming up. And also, too, We are going to be going over some ticker symbols today that you guys want to pull up. So don't worry, hold those off for now, but have them ready because I will be asking for ticker symbols here shortly. All right. Ray, absolutely. In fact, that's part of our training today is how do you identify these types of crossovers? How do you get sort of alerted, if you will, that these crossovers are occurring? Because let's face it, there's a lot of equities out there. So rather than having to sort through thousands of charts, why not make it easier on yourself? And we do have what's called IntelliScan. So before we get to IntelliScan, I do want to go over kind of the scenario of buying the dip. After all, that's what we're really training on today. Now, there can be a lot of different variations to quote unquote buying the dip. All right. But how do you strategically look and identify those scenarios versus maybe putting yourself at unnecessary risk, right? So how many of you had thought that you were buying the dip, all right, and it dipped a lot further than you thought it was going to? So let me know in the chat if that's ever happened to you. I can almost guarantee if you don't put your name in there that it's probably happened. You might just not want to admit it, and that's okay. Safe space here, right? Remember, everybody here is involved in the markets in some way, shape, or form. So, you know, we're really just all looking to improve here from an education standpoint. So certainly want to be able to help and identify some of those maybe problem areas that you've had before so you can see how to fix those moving forward. So if you take a look at our current chart that we have now, I just pulled up Dollar Tree. Dollar Tree has been on a really nice trend recently where, again, Ray, for you, we had that identification of the crossover and the shift from bearish too bullish, right? Now, again, let's go ahead and confirm together, all right? Because this is important for you guys to understand. Do we have those 4 points of confirmation? I would say yes, we could check, check, check. We do, along with, of course, that predictive trading candle as well. So if we've identified those 4 points of confirmation and you found that opportunity earlier and decided to enter in, again, completely hypothetically speaking, obviously we're looking backwards in time, but how to identify opportunities moving forward, maybe after a trend has already started. All right. So after that trend has already started, we've got that nice identification. Well, what happens when things start to pull back? All right. And I think that's one of the questions I get the most as our head trainer here at VantagePoint. When do you know whether or not this is just a shorter term pullback, giving you the opportunity to potentially buy the dip? Or is this going to be a reversal of kind of mass proportions that you really need to be cautious of? Point in case, right? Let's just take a look at what happened back here. Okay. So we're going to look at the difference between this scenario versus this scenario today. All right. So I see some of you have been caught in that before. Yeah. Are some of you a lot? Okay. All right. Well, hopefully today's session is exactly where you need to be to maybe avoid that scenario as much as possible moving forward. So glad you are here and that we can walk through this together. All right, so let's take a look at our crossovers. The first thing I want everyone to understand is that VantagePoint has multiple time frames you can look at, okay? So when it comes to the crossover we currently have on the screen, this is a 2-day trend forecast. It's looking out 2 days ahead of time. Well, we have a more conservative view as well, which we call the triple cross. So I'm going to pull up our triple cross view. Now, the triple cross sounds complicated, but it's not, okay? The triple cross is in fact very, very easy because it's already color coded for you. But the triple cross is just loaded full of incredibly useful and valuable predictive information that can help you identify levels where price might pull back to. All right. So keep that in mind. We are going to be using the triple cross quite a bit today. All right. Now, you can see here that the triple cross is actually made up of 3 predictive moving averages. You have the short term, all right? You have the medium term crossover, which is another predictive moving average. And then you have the long term. So we have the T cross short, the T cross medium, and the T cross long. What that tells us is, what is the strength of the overall trend? What's the sort of integrity of the current trend at hand? And so here we can see our current trend, let's just look at the most current level, is bullish. How do we know that? Well, it's shaded in green. Okay, we truly did try to make this as easy as possible. That's good technology for you, right? A lot of power, a lot of information, but simple and easy to use, right? So when you take a look at the triple cross, all right, this triple cross is going to provide a level of kind of dynamic support, if you will. This is actually an 18-day predictive exponential moving average, okay? Keep in mind, it is predictive, so you're not going to find this anywhere else. This 18-day predictive exponential moving average has 3 days of predictive data already built into this forecast. Now, if you want to pop the hood on this so you guys can see, I'm going to pull up the market details. So this is just a little behind the scenes look. You don't have to do this on every equity. You don't have to do this on every chart, whether or not you're looking at stocks or Forex or Bitcoin for matter of fact. You can look and see what markets are in fact really influencing the market that you're targeting, okay? So when you look at the behind the scenes view here of Dollar Tree, you can see that we've got many different stocks. There's actually 31 assets that go into this calculation, all right? Now, that's 31 assets just for Dollar Tree, okay? But there's also 31 assets for each individual stock or currency or ETF that you see on this chart as well. So really, really powerful stuff. If you think just of the web of data that goes into this, it's mind-boggling. So we won't go into that too deeply. But looking at Dollar Tree, you can see now that there are many influencing factors when it comes to the price movement of Dollar Tree. If you want to know where something is going, understand the factors that are driving it, right? Are they turning it to the right, to the left? Is it going straight? Is it going sideways, right? So look at the driving factors in order to understand where that asset's going to go. And that's what VantagePoint does. So all of this data to say, all right, that, well, quite frankly, it's all here for you on the software right here. So it's plugged into these predictive data, these predictive lines and predictive indicators for you. So you have leading indicators versus lagging indicators. All right. So what that tells you is now you have future levels of predictive support right here within the software. So if you look at this T-cross long line, you can see, in fact, even in our current bullish trend, because we've established we are in a bullish trend, right? When you are in an established bullish trend, one, you have an indicator that's just going to show you that automatically with a very quick look. We can see the trend is green. Price action is above our darker blue T-cross long line, which acts as that very dynamic support level, okay? So notice we've already had a pullback to that T-cross long level, all right? So these are points of reversions. Who has heard of a reversion to the mean? All right, I'm gonna say it again, reversion to the mean. Let me know if you have heard that term and we'll take it from there. Now, as I get the responses though, I want you guys to all see, what did we do recently? What did we revert back to? The mean, right? Because this is a mean, this is a moving average. This is an exponential moving average with predictive data built in, all right? So we're gonna use this as a potential reversion point, which can oftentimes be where that dip stops. So if you wanna know where price is likely to revert to before possibly bouncing off, then the T-cross long can certainly help you that. There are several moving averages that traders like to use for that, and this calculation works phenomenally, especially with the predictive data. So again, whether you're a VantagePoint user or not, these are all concepts that you can utilize in your strategies, all right? So let's see. All right, perfect, Abel. Well, thank you. Okay, so let's jump on in. I always like to just keep an eye on the chat. So if you guys have questions, type those in. All right, for my VantagePoint users, if you guys have a more in-depth question, let me know, because going over that here in the session can help another trader, right? It might be a concept that they've never heard of. So let's all help each other in these sessions and throw in those questions if you have them. All right. Don't be afraid of the chat. All right. I'm certainly not. So I love to see you guys engaged and really learning as much as you can from these sessions. So now that we see how to utilize this triple cross view, right? That was the whole goal here, is to make sure you guys understand how to utilize that triple cross view. So once we have price coming back down to a support level, there are a few key concepts you need to understand about potentially buying the dip as a smart strategy rather than a risky move. And so one is, will that support level hold strong? Are we at a support level that could hold? So in this scenario, are we at a support level that seems to be holding? I would confidently say yes, because, well, we've failed to break through this level 2 days. I'm going to zoom in just a little closer so you guys can really get a close up of this. But if you notice, what's happening right here is that you see our support level, our T cross long level is holding. Our price has tried to break below that level, but nope. It says this is too strong. All right. I'm going to support this price pushing up. All right. So support pushes things up. And so when we see this happening 2 days in a row, that gives us the confirmation that this level of support really, truly is holding fairly strong. So we have this sort of trampoline effect possibly that could happen. And so what else would we need after we understand that, one, support is holding strong? We would need some sort of renewed bullish momentum, right? We need some kind of bounce, if you will, pun intended, because really what we're looking for is sort of a support bounce. And so if you notice at support, do we have momentum shifting back to the upside? And when we're looking for that shift, that's where our neural index and our predictive differences are going to come back into play. All right, we already know we're in a bullish trend. We already had our 4 points of confirmation back here. But if you're looking to maybe capitalize on the next move in the trend, maybe add to a position, or maybe you missed out on the first part, got a little bit of FOMO and said, you know what, I want to get back in when it's the right time, right? So don't get emotional. Look for the signals to jump back in, and that could oftentimes possibly be a dip scenario. So why get in at the high, watch it ride back, and then have to wait for it to come back up, right? Why not just capitalize on the better opportunity using the indicators where you could potentially buy on the dip? That is strategic trading, right? Rather than just risking it because you thought you missed out, right? So again, do we have support? Yes, we do. Check. Do we have a bullish trend? Yes, we do. Check. Do we have a bullish neural index, meaning price action is expected to go up, right? I keep using neural index because I'm so familiar with that term. But for those of you who aren't familiar, that's okay. It just means we expect price to go up over the next 2 days. That indicator, actually all the indicators in VantagePoint are incredibly accurate, but neural index is phenomenal. Same with the predictive differences down here. So you can see, do we have renewed bullish strength? See that lighter blue line down there? In fact, I'm just gonna pull this up a little bit so everybody can see. We'll remove my chicken scratch off the screen. I do my best to draw neatly, but you know, when you're doing it with the mouse, it doesn't always work out the best. So I'm gonna just hide those other two for a second. So this short-term predictive difference, this is an indicator that is very quick. It's very sensitive. So for all of my short-term, quick, in and out, take profits, right? Make that cash register ring type trader. The short-term predictive difference can be very, very powerful. So if we're at a support level and we start to see renewed bullish strength coming back in, that can oftentimes signal the potential for that bounce off of support, or that reversion point has been met and now we're starting to get some bullish strength, expecting a bullish continuation. All right. So let's, now that you know the ins and outs of the indicators we're really going to be focusing on today, let me just add those back on right here. All right, and we'll take a look at some additional indicators as well. Now, can I ask please type in so I know how deep we need to go here before we jump into the scanning portion. So we're going to pull up some new charts too, and I'm also going to take yours as well. But who is using support and resistance in their trade strategy, in their trade setups? Please let me know, because I do want to make sure everybody understands that concept. I've already mentioned support and resistance a few times. Do I need to circle back and go over some basics, or are we good to keep moving forward? So just let me know in the chat while I get these added to the chart. All right, so while those responses come in, I see some coming in already, but if you take a look at resistance, okay, now keep in mind that support and resistance are points where price is likely to either pause or reverse or potentially even break through. Okay, so you need to know that essentially what these are obstacles for price. Now, sometimes an obstacle is harder to overcome than others, right? And so keep in mind, knowing that that obstacle is there is more than half the battle. Okay, so here we have resistance, right? Down here, we have support. Now that support level expands and stretches all the way out. All right, now guys, I already know I can't draw a straight line on the computer screen, so apologies. But you can see that that support level right here that's designated by that green arrow stretches out all the way across. You can probably see it all shaded in green on my screen, okay? Again, red and green. Support pushes up, resistance pushes down. So if this is a sort of intermediate support level right here using that T cross long, we already established that this is a dynamic level of support. Could you potentially use these as profit targets, right? Especially for quicker, shorter term moves. All right. So if we have that resistance right here pushing things down, all right, where are we likely reverting back to? We've established that our reversion point could be to the mean, and oftentimes it will revert to that T cross long level. All right, so this can be used as a potential profit target for that reversion back to the mean. Again, for those of you who like to short the market, this is a great potential short-term opportunity for that bearish reversion. Again, could you look for those 4 points of confirmation? Absolutely. Take a look at that short-term crossover. You have that happening. You have the red neural index, and you have the predictive differences coming down. So you have confirmation there, right? Let me jump back to the triple cross. But to what point? Where do we expect price to go? And that's where your T cross long level can really help you identify that profit target for a bearish position or potential reversion point for a bullish entry. So of course, then we would jump potentially back up to the upside using that resistance as our initial profit target. Now this could act as that obstacle for price. Again, we don't know if this is just a speed bump or if we're running into a brick wall here. Okay, remember, this is an obstacle for price. And so we would typically want to see 2 closes above that resistance level in order to signify the breakout. But right here, we have a bounce down to support, support holds strong, renewal of that bullish strength, and then initial profit target, right? So these are all strategic ways that you can plan your trade ahead of time so you're not fumbling over your, kind of emotional roadblocks. You're focusing on the true obstacle, which is identified here with resistance. All right, so don't let your emotions get in the way. Trade what you see and strategize around the data that you have. All of it provided right here in VantagePoint. Very simple, very easy. And you can see we walked through a couple of different scenarios here today already that each trader might look at it a little differently. And guess what? That's okay. Everybody's trade strategy is really as unique as they are. Trust me. I have worked with thousands of traders, and everyone's unique in their own right, and so is their trade strategy, as it should be, because it is your money, right? So let's jump on into what we call IntelliScan. Now, if you are a VantagePoint user, tell me, are you familiar with IntelliScan? have you seen IntelliScan before? Even if you're not a VantagePoint family member yet, let me know if you're familiar with the IntelliScan, because we do some sessions as well to just review and show, other traders out there the power of artificial intelligence. But let's jump on into our IntelliScan. So looking at the scan, here is the IntelliScan. Now, our scan is really exactly what we've looked at. All of these indicators across the top, the filters here, are the same indicators that are down here on the chart. So please do not get kind of confused or intimidated by the filter. All right, these are simply the same indicators we've already looked at. This is a visual representation down on the chart. And the filters in the scan is just a way to find those types of opportunities. Perfect. All right, good. We are going to keep rocking and rolling then. Looks like everybody's on pace. So phenomenal. Let's take a look at ways to find these pullback opportunities. All right. Does anybody ever wish that they could get in at a better entry timing, that maybe you missed the first portion of a trend but wanted to get in at the dip and just couldn't identify it, and you got a little scared, a little nervous, so you just said, you know what, I'm not going to do that. All right, so maybe you missed out on another good opportunity because you didn't have the confidence. So let's identify how to find these types of opportunities and find them that have the confidence backing up with the predictive indicators. So short-term crossover, we've looked at that, right? We've said, all right, give me a short-term crossover that is going up. I'm just going to put up in the direction. It's really that simple. If you don't want to type it like I just did, you can literally just hit the drop down, all right? And it'll say, give me up, okay? Now, the medium-term crossover, we can leave that open for now. Our focus is really going to be on the the triple crossover. I almost said the long term, but I meant the T-cross long. But we're going to use that triple cross. I'm going to pull that down. You can just rearrange them kind of like you do the cells in Excel, right? If I have any Excel whizzes in here, this kind of is very, very similar. So we're going to focus on the short-term crossover and the triple crossover, okay? So I'm going to leave those two first. Now, with the triple cross, do we want things that are also going up? Now, I pulled Dollar Tree up because I want you guys to see visually, is our triple cross indication up? Yes, it is. We've already established this, and we're looking for now renewed shorter term strength. All right, short term, something that might have pulled back and is now expecting to go back up with that support level holding strong, right? So taking a look at our neural index trend, let's go set that as up. That neural index trend is simply that green and red bar that goes across the bottom. We're looking for that to be green because we want confirmation here. We don't want to look at charts that aren't already confirmed by the predictive data. Let the software do the work, right? That's what you were asking for, Ray, and this is what you're getting. So we're going to set that short-term difference trend to go up as well, because we would certainly want that short-term difference trend to be traveling to the upside. Now, if you want some additional confirmation, you could set the medium and the long term to be going up as well, also with that predictive trading range. All right, so now that we've really programmed our software, all right, that sounds very fancy, but essentially we just said, these are the types of opportunities we want. Please go find them for us. So now all we have to do is say, let's use our stocks. And I'm going to drag and drop those stocks right on into our IntelliScan. Let the software do the work, and it's going to sort and filter through over 1,800 different assets. All right. And these are just the equities alone. We didn't even add ETFs or talk about currency pairs or cryptocurrencies. So these are literally just the individual stocks that we pulled in. So many more where that came from. But you can see out of 1,800, we have 124 displayed. Ouch. 124 is still a lot to look through, right? I don't know about you, but I don't like to waste time. All right. So what you can do is, in fact, narrow down your criteria based on your own personal preferences. So do you have a close price that you like to stay above or below? And when I say close price, I'm really just talking about price per share. Is there a range that any of you like to stay between when it comes to close price? Do you like higher price assets, lower price assets, maybe somewhere in between for my options traders? let me know in the chat, and I'll use one of those here for our scan criteria. The other piece here is volume. All right, volume is critical when it comes to really getting in and out of an asset, making sure that there's enough activity, enough volume, enough liquidity within that asset. So when you're ready to buy, there's someone there to sell. And when you're ready to sell, there's someone there to buy, so you don't get stuck in that asset unintentionally, right? We want to be strategic about the opportunities, and volume and close price are a great way to sort of up the quality of the opportunities that you're presented based on your own style. So looking at close price, let's see. So let's just go with, all right, so 150 and below. Thank you, Mo. I appreciate that. So let's go less than or equal to. It's really that simple. Just click on the equal sign and change that sign to less than or equal to 150. All right. So now we have all assets that are below $150. Okay. So volume, we'll set that at maybe greater than or equal to, I don't know, a good baseline for volume. And again, this is adjustable and customizable. So you put in what works best for you. But generally speaking, $1 million or more in trade volume is going to be enough liquidity that you don't have to worry about getting stuck. Okay. Also going to lower that bid-ask spread for all my options traders as well. So using volume as a qualifying criteria for your individual setup can help narrow down the opportunity. So we went from 124 to 70, right? Well, we're really looking for a very specific type of opportunity, right? So we're actually looking for opportunities where that triple cross has already started to trend up. So you can see some of the number of days in the triple cross is set at 1. These are more fresh reversals, if you will. So you can see that this major trend just started 1 day ago. That's not necessarily an established trend. That would be something that's really just starting out. So when you're looking for that opportunity for the buy the dip, you're looking for something that's already started, has pulled back, and is now expected to continue. So you can see our triple cross has been up for, a couple of weeks here. So we can actually set that triple cross to have already been up for quite some time. So let's just set this at greater than or equal to, I'll just put in 10 here for us, right? So if you notice here, we've got triple cross up for at least 10 days. This is giving it some time to overextend itself with the potential for a pullback, right? A potential for a reversion. That's what we're looking for. All right. So if we take a look at our short-term crossover, we may have just wanted this to start moving up very recently. So let's just filter this by number of days. I'm just going to sort. So I'm going to look for those things that have the freshest crossover, meaning the bullish strength has just renewed about 1 day ago, right? The timing indicators have just signaled for you, Ray. So it's just alerted that this signal happened most recently 1 day ago. All right. So that's the type of trend that you can start looking for within the software. You can see we have plenty of different types of opportunities here within our setup. So you can see something like Egan right here. Again, short-term crossover happened 2 days ago, which means we have a timing signal that our bullish strength is starting to renew. All right. The triple cross has already been up for 55 days. So we're in a continuous bullish trend, and we've got renewed bullish strength from our other predictive indicators coming across the board. So if we open up Egan, let's just take a look and see what this does for us. Look at this. So we have a trend that has started and is already gone up, is continuing to go up. It has pulled back and now expected to potentially continue. How many times have you seen something give a little back before it takes a little more, right? What goes up must come down. And so oftentimes we'll see a nice big run followed by a pullback and then that continuation. And those are the types of opportunities that you're looking for, where we had this sort of rest and reset, and then that renewal of bullish strength coming in for a bullish expectation and continuation of that established trend. Keep in mind, established trends are harder to break too, right? a new trend that's really just starting out can be, it can be a little bit more sensitive, right? And so it requires a little bit more care and attention. An established trend is harder to reverse out of. And so that's why it's difficult to identify reversals. And of course, we can look for those signals and strength in VantagePoint as well. But if we're talking about reversions, we're looking for, let me jump on over to our triple cross view here. We're looking for price to revert back to our T-cross long level, right? Identify that renewed bullish momentum as that support level stays strong. So there were two key points that we mentioned earlier, all right? And really it's three. Do we have an established trend? That would be number one. All right. Do we have a support level that's holding strong? That would be number two. And do we have renewed bullish momentum or strength coming back into the trend? And that would be number three. So you have a really quick way to identify the potential for a buy the dip scenario or that bounce off of support that allows you to strategically time that potential trend versus hoping that maybe it might bounce, right? Now you have checkpoints along the way that are going to keep your strategy in line and keep you trading within the bounds of your trade plan. All right. So have a plan, trade the plan. Hopefully now you see how to utilize some of the indicators that are out there. Again, whether it's on VantagePoint, you're using a different mean, or you're using momentum indicators as well, or support and resistance. So let's take a look at our verified support zone. Do we have support and resistance coming in here? Oops. Let me make sure I click on the right thing. There we go. And we can see we do have support, right? And again, this happened 2 days ago. So in fact, this would have shown up on Monday, all right, with a potential for that bounce and using even resistance as potential profit target or a potential breakout. The predictive trading candle as well can help you with that. And you've got about a 14.52% in just a couple of days. I don't know what trader wouldn't want to see that type of progress or movement within the trend, or be able to take advantage of something like that. And again, we're looking at volume, we're identifying close price. So really finding opportunities that meet your trade style, meet your trade needs. That's one key piece of this because you're comfortable trading these assets. All right. You have to be confident and comfortable in order to keep those emotions at bay. And then, of course, utilize those predictive indicators to guide you through that scenario. So we've got a great potential reversion to the mean and bounce off of support there. So you could also add in that verified support to the scan. Now, some of these indicators like the verified support zone are optional indicators you can choose to add. Whether you use them in, like I said, VantagePoint or in your own platform. If you're not already using VantagePoint, I'm just going to add this to the IntelliScan so we can see exactly where those levels lie. While this loads, don't forget to like and subscribe to our channel. We're always trying to just provide additional education and resources for traders out there. So I appreciate everyone's feedback in the chat today, and just making sure that we keep this, fresh and relevant to what you guys want to review on these live stream sessions. So again, you can identify that support level and price. You could even put that right next to close price so you can see how close that close price is. Is close price, the price per share, where price action closed yesterday, how close is it to that support level? Are we likely just bouncing off of that level, right? So you can compare and contrast from that standpoint as well. You could also use resistance to identify potential profit targets as well. So lots of great different ways to utilize the IntelliScan. But here's the best piece, is that we identified a type of opportunity and how this could benefit you as a potential trader in this scenario, right? Especially as we're experiencing some pullbacks in the market. That's why, understanding how to take advantage of these types of opportunities can really lead to some proactive trading on your part to plan and prepare when things start to renew their bullish strength. And so not only did we identify on the screen what to look for and the confidence to do so, but also how to find those types of opportunities in the scan. So let's go ahead and do this. We've looked at the scan, we've looked at the charts. Let me open things up to your ticker symbols, because honestly, that's my favorite part of these sessions, is just seeing what you guys want to look at and diving head first on into those assessments. I'm just going to minimize our scan here. I can just hide that in the background. We won't close it, but we'll hide it. Let me know, what ticker symbols do you guys want to look up? I will open up that to anyone who has a request. Yes, and don't forget to like and subscribe, please. And you can also go to VantagePointForecast.com. If you need additional information, don't forget VantagePointForecast.com has a lot of great information about VantagePoint and how to get answers on maybe some of the questions you have if we didn't cover them today. So we really do try to provide that for our VantagePoint customers and those who might not yet be a family member. Okay, AMD, Meta. Got it. Okay. And I mentioned something earlier, and I think this would be a great time to talk about. Does anybody want to look at Bitcoin? Somebody had asked me earlier, and I didn't have time to jump in on our sessions that we hold for our VantagePoint family members. Again, we're always trying to provide additional education, and I didn't have a chance to get to it. So this would be a perfect time. If you're in here, then I hope that we can cover it now, right? So AMD, Humana, someone had asked about Meta, and then kind of rolling over, I'm gonna pull up Bitcoin as well, because somebody did ask me about that earlier. So let's just pull up BTC. So you guys can see we forecast for many different asset classes. I'll just pull this up for you guys so you can see all the ETFs, the different ETF sectors, Forex, which would be foreign exchange, or the currency pairs. You also have ETFs, cryptocurrencies, and then of course other ways to organize those through themes as well. So lots of great resources here within the software. So let's jump on into AMD to get started. This was the first request, so this is the first one we're going to review. Okay. Well, boy, oh boy, isn't this a great opportunity? Who was it that gave me AMD? Thank you for this, because perfect. All right, Baby Buffett. I love it. All right. So I got it. I get you. Scene. So let's jump on into our assessment. So first and foremost, we have to understand current market conditions today. I mentioned it previously, but we're experiencing a little bit of shorter term weakness, right? In current market conditions. That would be on the SPY, the Qs, the diamonds, the major indices, as you will, right? I'm sure you guys have heard it on the news. That's usually when people hear about it, unless you have VantagePoint, and then you hear about it last night. So it's always nice to have that predictive data so you can proactively plan and prepare. But let's take a look at our short-term crossover. So our short-term crossover that we used in the scan to help find types of opportunities is in fact in a downtrend. Our blue line is below the black line. So we're experiencing some shorter term weakness here. All right. So does it meet the criteria of the support level holding strong, or do we maybe have some other, well, basically, do we have further to fall? Okay. That's really the biggest question I'm sure somebody's asking here. So let's jump on over to our triple cross and see, where is the triple cross in relation to current price? So we do have quite a bit of room between current price, which is way up here where our candles are, to the triple cross level. All right, so we would be a little bit more cautious as we see we don't quite have the strength here coming from our predictive data. We have still a little bit further to fall. Notice I'm going to jump back to Egan or even the Dollar Tree, because you notice we were hitting that support level here. All right. That's not a criteria that we have on AMD. We are actually sitting above that level with further to fall if that happens, right? So we really don't have a support level that's backing price up right now. So I would be cautious at that point. Again, you can choose to do whatever you want, not a licensed advisor. I'm not here to tell you what to do, but just looking at the indications, a little riskier when we have so far to fall, right? And then of course, keep in mind, we've got earnings coming out as well. So earnings, it's going to be aftermarket. So I'm not sure where this is at currently, aftermarket. But earnings is always going to be riskier. I did a session, in fact, go back and watch it if you need to know about earnings. Everybody should understand earnings and know at least the basics of earnings. We go over a lot of that in the past session that we did on Thursday. And so you can see here, earnings is always a little bit riskier. VantagePoint forecasting at about 48% on the earnings. So not something to definitely be cautious of, especially with earnings coming out. I think I'll just leave it at that, because anytime we have earnings, that can cause some increased volatility due to some of the fundamentals, and that can skew some of the forecast as well. And so that may be why we're having some trouble here. Earnings has had earnings is a volatile time in the market, and that could be why we're experiencing some of the current situation that we are prior to a potential bump in seasonality. I'm going to pull this up. I don't normally try to pull these up, but we do again have some additional indicators here within the software that you can utilize. And so if you notice this seasonal forecast, this is a Larry Williams indicator. So a seasonal forecast can also help you time those pullbacks as well. So of course, I would be remiss if I did not show you the power of seasonality. And so you can see that really our uptick in bullish seasonality does not start until after that earnings period. And in fact, we can see not until like 11/5, which in fact is tomorrow. So I'd be cautious about the earnings, but jump back 1 year. Let's just look back. We'll just pull this chart out. And you can see, seasonally speaking, we've had a small jump on price. I'll take the crossovers off just so you can see. There we go. All right. It's like looking something for when it's right in front of you, you can't see it, right? So we do have a small jump up seasonally over the last couple of years, not lasting very long. You could also take this back to a 2-year to see, okay, we do have a bullish trend again, lasting kind of towards end of July. So you could also back that out to a 3-year. And again, I'm just looking for that quick movement to the upside. So, that can also help you navigate through those dips as well, looking for those peaks and valleys from a seasonal standpoint. So let's move on to Humana. Oh my gosh, you guys are all looking at earnings, aren't you? I know it's earnings season. It's hard to not pull up a chart that has earnings on it. Trust me. I know. So if we take a look currently, we do not have a bullish crossover at this point from our short or medium term crossovers, but let's take a look at that triple cross. Are we at a support point? Because that's what we said. We need to establish that support point, but we have 2 closes below. So we would we would need a lot more strength and a lot more confidence, especially coming into earnings, for that potential bump on up. So right now, that support level, we can't confirm that it's holding strong because we actually have 2 closes below that support level, confirming that this could potentially turn into something bigger. We do have a little bit of renewed strength, right? But take a look at your neural index. So without the confirmation, our other scenarios that we looked at together, and we had confidence and it was, just a clear signal, that's what you're looking for. You're looking to trade with confidence, not questions, right? Trade with confidence, not questions. And that's a key concept. If you find yourself trying to convince yourself to take the trade because you just know that it's going to happen, you're probably trading higher on emotions than you are the technical analysis. So rein it back in, reassess the chart, and see, does it actually meet your setup? And here we've got kind of a mixed bag happening on Humana. So you may, again, want to look at some additional analysis. Additional analysis can help give you confidence to take a look from a different perspective. And so let's look at that seasonal pattern, that Larry Williams seasonal pattern. So again, we were expecting that pullback from the seasonal pattern and expecting that to bump up possibly after earnings right around beginning of November 5th. Here, again, earnings being a little bit, obviously riskier just because of the scenario. But if the trend continues bullish, we could, again, use that as that potential dip scenario. The only caution I say there is that we have earnings. So again, be aware and look for your setup as a trader, right? So let's look at Meta. We got about 5 minutes left. All right. So Meta had a huge drop after earnings. This is why I say be cautious. So this is perfect segue, right? So if you take a look, earnings, we had aftermarket close on earnings for Meta. This is why you need to be cautious with earnings, because oftentimes things like this can happen. Now, oftentimes, especially in things like the Mag 7, this is where a lot of traders will take advantage of that reversion back to a mean or a potential buy the dip. So how do you know? Well, again, do we have a support level holding strong? So we have already, I'm putting on the support and resistance again, so you can see this shaded area right here is support. All right, so we are deep within a support level. Our secondary support, this is our first level of support. Our second level of support is right here, and then our third is this darker shading. So we are actually sitting right here at a support level. So if our support level holds, okay, and we see bullish strength starting to renew coming up, and we get that timing crossover, then you can have confidence that this trend is expected to reverse to the bullish side. Do we have that yet? No, right? In fact, we don't. Our short terms coming up slightly, not confirmed with that neural index, and our trend is still red. Could we potentially see that happening up against a support? Yes, we do have one of those criteria fulfilled. We are up against a support level, right? But will that support level hold? And will we have renewed bullish strength coupled with the right time? And that is going to be key to give you the confidence to do what you need to do as a trader. So and Met, I think, is down today, 672 or something like that. So we're right around here. So will we be able to break back above this previous level, or are we just coming up to try to refill that major gap that we had? So one key piece here, I will look at Bitcoin here in just a moment, but important to note, old support that has already been broken through on price. I think everybody can see here that we have broken through support in this case, right? So this is now going to become resistance. So and again, I'm not saying that this is happening, right? But just a scenario, if price were to track back up, keep in mind, this is now resistance. So this becomes an obstacle for price to try to push higher, right? So this is going to be downward pressure on price because it is an old support level that has now transitioned into a resistance because price is below it. All right, so just important things to keep in mind. All right, and that goes true for any support and resistance levels as well. So let's look at Bitcoin. So Bitcoin, whew. All right. Bitcoin has had a couple of really, really nice bullish runs, a couple of also really nice bearish runs to the downside as well. So if we take a look currently at Bitcoin, we can see we're still in that bearish expectation. When will we start to see this potentially bounce back up? And I will always kind of die on this hill, if you will, is look at support and resistance. So right now, we are currently sitting at a support level. Do we have any renewed bullish strength? And this goes back to our buy the dip or reversion to the mean scenario as well. If a support level is holding strong and we have renewed bullish strength, and the possibility of a bounce off of that level where support just kind of acts as a trampoline, becomes much higher. But without that, where is price going to go? Possibly down lower, or it might just not move anywhere, right? So if that's the case, why chase after something that's not happening, that's not meeting your setup? So again, if you look to see, do we have a support level? Yes. Do we have renewed bullish strength? I think the answer is no there. Where's our next level to look for? It would be this next support level right here. And if you ever want to see what that support level is, click on the arrow that highlights it. And there you have it. We've got support at the low there, which would be 1036.12.4, if you will. So 103.612 for those of you who need to know exactly where that is, right? So will that support level hold strong? Will we see renewed bullish momentum and bullish strength come in at that point? If we do, we have a good possibility of a bounce. If not, well, then riskier business there. So I hope that this session was enlightening to a lot of you who maybe have been dancing around how to utilize some of these indicators together, right? To really strategize around the powerful information that's provided for you. And so I would encourage you to utilize that predictive data and create a trade plan, create a strategy that's going to allow you to proactively and strategically trade versus put yourself at unnecessary risk. So I hope you enjoyed the session today. It was great getting to spend the last hour with you all, and looking forward to our next session. So I'll see you then. Don't forget to like and subscribe so you get the notifications of when we have some next, hot topics coming out. So we will